switch it up like
it's about to go up, break them like internet. Goofies wanna run up, we leave them in the dead. You know how it go down.
You say, okay, I have a lot of money, but you have no money unless you take profits.
When the first ever spot ETF was created for gold 10x.
And the only thing I really knew was Bitcoin at the time, so I just invested very heavily into that. Rode it all the way up.
What that taught me was that I need to be self-sufficient.
Even the creators have said it's going to be the predecessor of CBDC.
Of course, don't invest more than will keep you up at night, but a solid DCA investment strategy, and pretend the red sell button doesn't even exist.
in fact, we about to go up like.
All right, we are live. Welcome to the Degen Roundtable. I am your host, Brendan Mercier, co-host and producer today, Agent J. We are also here with Pickle Yard, Jeff, and Nate McGidditt. We are really excited to bring you our first live show. Previously, we have recorded the first 3 episodes, episode 2 being a 2-part episode. So make sure you watch those 3 because there's some really great information that we want to share with you. And every episode is unique. Every episode has some incredible nuggets of knowledge that's going to help you become more knowledgeable about the markets in general, especially the crypto market. We also here at the Degen Roundtable are going to be sprinkling in artificial intelligence, technology, just general bettering of yourself outside of, a money standpoint. But definitely we are focused on how you can make money. Now, remember, this show is just our opinions. We aren't financial analysts. We don't suggest doing anything that we say on this show. It's not financial advice. So we want to give you the tools so that you can do your own research, that you can have your own understanding of how this space works, and then make your own decisions on if you think it's proper to invest at all, or in any specific projects that we might mention. But again, nothing here should be taken or is financial advice. But we're really excited to bring you today what we like to call the perfect storm theory surrounding crypto. So I'm just going to give you a quick rundown of the show. First, we're going to get into our TA section with Agent J. We will then be talking about what could be in the next 2 to 4 years a perfect storm in crypto. And that starts with potential of institutional investors, retail investors entering the market, and then regulation and what that might look like from a government standpoint, how that might vary from country to country, or maybe even the United States, state to state in some cases. But we're going to get into all of that, and we are really excited. So I'm going to kick this over to Agent J, and he is going to bring you a little TA. Jay, technical analysis, take it away.
All right, guys, give me a second here. I'm going to share my screen with you. So we're going to go over the Bitcoin charts today. Give me 1 second. There we go. Let me know if you guys can see that okay.
Perfect.
All righty. Okay, so we are currently on day 25 of the new 60-day cycle. Now, Bitcoin for the past few weeks, ever since we had this pretty strong up move here from the 15th of June, we've spent about the last 2 weeks or so crabbing just sideways. Now, we were talking about this a little bit earlier, and I mentioned that what I would like to see Bitcoin do for this week was close above 30,600, right? Because 30,600 would allow us to close above this purple line right here, which is our 10 moving average. It will also allow us to close above this long-term trend line, which you'll see earlier. This one is a very long-term trend line that has formed over the past half a year and longer, actually. Unfortunately, we did not close above that 30,600 area. And if you can see currently, right, we're hovering around 30,000. Now, if you notice, we've been doing this sideways action for a little while now, and Bitcoin has been it's basically being pushed into a corner, right? If you notice here, not only are the top and the bottom of our Bollinger Bands starting to converge on price, but we also have both the 10, which is the purple line over here, and then the 20-day moving average also starting to converge on price. Now, whenever something like this happens, you can bet that once price starts to get pinched and backed into a corner like this, that you're going to expect some volatility, right? Whether it's to the upside or to the downside, we don't know quite yet. But what's actually happening next week is going to give us some insight into what could potentially happen. If you notice here, I have a few dates set. On the 12th, the CPI numbers come out. And on the 15th, it also happens to be right here. So you have on the 15th of July, day 30. So the CPI numbers and then the midpoint of the cycle is going to be sometime next week, right? And so what I wanted to happen was for Bitcoin to close above that 30,600 area. Why? Well, because that'll close above this green sloping trend line here, and then it'll also close above that 10-day moving average. That would have given price some cushion just in case the CPI numbers are a little bit higher than expected. I believe the CPI numbers last month was 4.3%. Now, the CME has pretty much priced in a rate hike during the next Fed meeting, right? And if the CPI numbers come out a little bit higher than usual, that's going to make that Fed rate increase a little bit much more probable, right? And if that was the case, because we didn't have that cushion, then there is a potential for price to come down to about this 2,800 area right here. Okay, but what I'm thinking is, if we zoom out, right? So if let's say we close. We head down to that 2,800 area. The reason why I'm targeting anywhere between 28,000 to 28,500 is if we turn on the 100-day 11 moving average, you notice that that moving average is sitting right there at that 28,228, right? So that's going to form pretty strong support for Bitcoin, right? If you notice, it's used that moving average as support several times before we actually broke down into this cycle low, which was our cycle low for the last cycle. Now, if we zoom out, if we go to the weekly time chart, if you notice, the 10-week moving average is also sitting at around 28,250, fairly close to our 111-day moving average. So that's also going to form pretty strong support. And then if we zoom out on the monthly, see here in the monthly, right? We have the monthly, the 20-month moving average at about 28,500. And so if Bitcoin were to head down, right, let's say we got that higher than expected CPI, which would make the likelihood of a Fed rate increase even higher, and the market starts to panic a little bit and we do start to come down on price, then we can expect that $28,000 area to $28,500 area to form pretty strong support. Okay. But hey, what if we get a little bit more bullish news next week, right? Let's say that the CPI comes down lower and people are thinking, okay, well, you know what? The CPI, inflation came down a little bit more than usual. So that would probably make it more likely that Jerome Powell keeps the rate paused at where they are. And then that gives us some upside momentum. Well, our targets have not changed, right? So our targets for that $36,000 Bitcoin on price, that's still our next target over the next few weeks, right? And what I'm hoping is we get somewhere along, we start heading that way, probably sometime past day 30. All right, so that would give us that right translated cycle, and we start moving up a little bit more from there. But you know, let's see what happens next week. Like I said, the CPI will be coming out on Tuesday. And if it's a little bit more negative than usual, then we can expect a little bit of a downward price movement. But expect Bitcoin, if it does start heading downwards, to hold this area of 28,000 to 28,500. Right? I don't expect us to come down any lower than that. If we actually pull a fib retracement here from our swing low to our current all-time high. Sorry, our current swing high. You also notice that this 0.5 fib level, right? It's not a true Fibonacci number, but if, as you guys know, 50% is a psychological number, right? When people see, hey, we're at a 50% discount from our local high here, people are going to start wanting to buy, right? When people see, hey, 50% off, let's start to buy. And you notice here, where does that 0.5 fib level kind of match up, right? It sits also right on that 100-day 11 moving average at about 20,155. And so you start to see a confluence of a whole bunch of different moving averages and other indicators pointing us to, hey, look, if Bitcoin does start to head down, we have a lot of cushion around this 28,000, 28,500 level. All right, so that's it for Bitcoin. Let's head over to Ethereum. I want to give you guys a little bit of an update for Ethereum. Ethereum, on the other hand, you know, we did have this up move, right? We didn't have as much of a strong up move as we did with Bitcoin. And if you notice, it's pretty much acting in the same way as Bitcoin, right? It's hovering around this 20-day moving average. Now, if we get some bearish news next week, what's going to happen is, like usual, Bitcoin dominance is probably going to increase. People are going to start funneling capital back into Bitcoin, and we are probably going to see Ethereum start heading down to, I would say, our first target is the top of this band here at around 1,790, right? But if you notice, Ethereum, I'm going to zoom out here a little bit. What do we notice here about Ethereum, right? It's respected this long-term trend line that has been forming since November of last year, right? We've had higher lows, higher lows, higher lows, and higher highs, right? So Ethereum has pretty much respected this trend line since the beginning of this year. If Ethereum was going to come down, let's say something like this, right? I would expect this top band of the purple box here to serve as support first, right? If you notice, we have a cycle high here that's also going to serve as support. And if we break down, we're probably going to come down and test that trend line once again, right? If that drop is steep, we could probably expect Ethereum to head down to about 1,700 or so. But if it's a slower descent, right, I would say look for anywhere between that 1,700 if it's steep. If it's a little bit more of a slower descent, probably around 1,750 or so, right? But I don't see Ethereum coming down any lower than that. Because even if, like, let's say we get a negative CPI and then, okay, that's a higher likelihood of Jerome Powell increasing the rates during the next meeting. Look, I got to be honest with you guys. A 0.25 increase, okay, it's still 0.25, right? But it's not as big of a deal as when we went from 0 to 0.25, right? 0 to 0.25 is a pretty big deal. From 0.25 to 50 is a pretty big deal, right? That's a double. But from 5.25 to 5.5, you know, it's still going to hurt, obviously, right? We're still going to see some effects of that increase in the market overall, but it's not going to have as much of an impact as going from like 25 to 50 or so. So that's it, pretty much what we have here for Ethereum, right? Ethereum is still has to reclaim these two cycle highs. Bitcoin already did so, right? So Ethereum still has a little bit of work to do. But really, next week is going to be pretty pivotal in determining which direction we want to head. And so really pay attention to what's going to happen, to what happens on Tuesday. And really that's what's going to determine which direction price is going to want to move for the next few weeks, heading into the latter half of this 60-day cycle. So that's it for the TA for both Bitcoin and Ethereum. If you guys have any questions, I will go ahead and send it over to you.
Thanks, Jay. Absolutely amazing, as always. I think that people watching and people getting into this will really learn a lot from just listening to you and seeing how you put your charts together, see where what data you're using to make your decisions, because technical analysis, TA, is very important when it comes to figuring out, what our markets are going to do from a statistical standpoint. You mentioned a couple things, one of them being the CPI numbers, right? And last month, a lot of people were really excited because, hey, we saw 4% CPI, which is the lowest we've seen since the pandemic, since we started printing money after the pandemic, pretty much. We maximized, or I guess the highest interest rate or inflation rate, I should say, was 9.1% in June 2022. So in a year, it's gone from 9.1% down to 4%. But there is something interesting to note, and this is where I think that they are a little bit weary, is that core inflation was still at 5.1% last month. So for me, I'm really looking to see what the core inflation number is, because that's a number that they're a little bit worried about still. And that's why I said last month that I definitely see an increase coming next month. I know there was some disagreement on that, if they would pause 2 months in a row. But for me, right after I listened to them, it was clear to me that they thought they were going to raise rates in July. And it's looking to be close to 100% that that's going to happen now. And they did say that they have 2 more rate hikes. If they're true to their word, or if the market doesn't dictate otherwise, this would be the first of those 2. Now, again, the market will dictate it. So like you said, if the CPI numbers come out hot and inflation's higher than we had anticipated and it's not going down any further, then they may pivot their decisions. But if it's 5.1% core inflation, the last time that inflation, core inflation, was below 2% was in March 2021. So we're talking over 2 years of sustained inflation, and everybody's seeing it, right? Everybody's seeing it in their grocery bills, in their housing, which the housing market hasn't come down at all, right? So we've seen huge increases in everything. And this is one of the worries of, like, okay, if I give everybody $1,200 in the United States, well, that $1,200 isn't worth $1,200 anymore, because it's just causing rampant inflation. And so we know now that all of that $1,200 of free money that people received from the government wasn't really free at all. And in fact, they're losing more money long-term because of the continued inflation rate. So wasn't part of our topic today, inflation, but it is something that's going to be really important to follow over the next month, as Jay stated. And again, core inflation maxed out at 6.63%. And so 5.1% of core inflation, that's really not a huge drop. It's only dropped 2%. While overall CPI numbers have dropped 5.1%. So it's been a bit sticky. And that's the worry for me. And if it continues to stay sticky, will they adjust their estimates of only raising twice? And I think we've seen that in the market, a little bit of worry in the market over the last few days to a week. And like you said, we're really going to need to pay attention over the next week. And you pointed out those key dates. Anything you want to add to that at all?
Yeah, I actually just wanted to share this. So Cassie asked, if the drop is steep, how worried should we be? If that drop is steep, Cassie, like I mentioned earlier, there's a number of indicators that's giving us some confluence as far as where Bitcoin is going to hold support. And so the thing is, Bitcoin has pretty much whatever they were going to throw at the market, they've already thrown, right? They've already emptied their clip, right? And Bitcoin has been pretty resilient through this year, right? If there was anything else that was going to collapse us, I think it would have been the bank runs earlier this year. And then now, if you're following the news within the space, you know that Gary Gensler has kind of increased the rate at which he's actively coming after cryptocurrency, right? Probably because he wants to go out with a bang if the rumors are true that he's going to make an exit sometime soon. So Bitcoin and the overall crypto market in general has been pretty damn resilient so far, right? So if we are going to make a drop because of the higher than expected, or if we do drop because the CPI numbers come up higher than expected, like Brendan was talking about, then I see that area between 28,000 to 28,500 holding us pretty damn strong support, right? And so I think we don't have to worry too much about it, to be quite honest with you. That's my personal opinion. And if we get any discount over this next coming week or so, that is an opportunity to buy, right? Because if we know one thing, Bitcoin is heading into that wave 3, right? That macro wave 3. And so that's usually the most impulsive. And so any discount that the market gives us is an opportunity for us to buy. So,
and I can actually add on to that too. Something incredibly important to understand about, being worried about dropping more, right? Technically speaking, we've already hit our lows, right? And so in already hitting our lows, with everything that they have been throwing at us, emptying the clip, so as you say, at Bitcoin, we still didn't even hit 11K, right? There was a whole thing going around of like 11K and pray, right? It's kind of like, okay, yeah, because we don't want to go any lower than 11K, but we ended up literally hitting 15, and then that was it. And that we're done. And so at that point in time, what that proved to me and what that's going to be proving to a lot of people is that Bitcoin is a lot strong. Like Bitcoin and cryptocurrencies in general are a lot stronger than possibly any market would ever think they were. So when it goes up, it's really going to go up and it's going to stay up. Now we have a lot of crabbing going on because of exactly as you were saying, they're still throwing things at us. They're trying to knock these numbers down, which is hilarious. That I almost feel the institutional money right now, the big money, they're trying their hardest to drop the price. And it's so funny that they're trying to drop the price and all we're doing is just crabbing sideways and maybe like a slight little drop here or there, right? And the way that they're fudding everybody out of things, but yet our price range is still just crabbing, right? That right there tells you just how unbelievably strong the crypto market is. And yeah, I think we're going to have one heck of a bull market coming in, especially when they finally release the gates and allow crypto to do what crypto is trying so hard to do right now, which is just go up, just pump straight up.
Yeah, I think that's a good point, Nate. And it's actually something we're going to get into in this next topic. So I think that's a really good segue into the institutional element of the markets. You know, like you said, crypto is a monster to be reckoned with. There is so much upward pressure that's been building and building and building. And it's the FUD in the market, FUD from the government, from the SEC, from the regulators that have really been driving the price down. And I don't know if all of you out there know this, but the institutions and the government, they know what each other's going to do before we know what they're going to do. So the institutions knew for a while that they were going to reapply for a Bitcoin spot ETF. That's not just something that happens overnight, right? And so what's their goal and what's the goal of these big institutions? They want to be able to buy a lot of Bitcoin and potentially a lot of Ethereum, because once their spot ETF gets approved, they need to hold, or if, right, we're expecting it to get approved at some point, and it will at some point. It's just a matter of when. So let's say when, if or when it does, they need to hold in assets the amount of Bitcoin or the amount of Ethereum, because again, once a Bitcoin spot ETF gets approved, Ethereum spot ETF is going to be right behind it. And will there be other spot ETFs for other coins? We'll see. Right today, we're going to focus on Bitcoin and Ethereum. But of course, right, that's how things happen. Each of these are individual assets, and each of these individual assets are going to have an opportunity to, you know, receive a spot ETF if institutions find a value in it. And so we already know that they find a value in Bitcoin. BlackRock CEO has called, Larry has called Bitcoin digital gold. And that's a big reversal from what he said 5 years ago about Bitcoin, when he pretty much called it a scam, right? So they're calling it a scam to keep you from buying it low. So don't always listen to what people are saying in the market. This is why it's so important for you to not even we don't even want you to listen to us. We want you to do your own research. And we want you to come to your own conclusions so that you can make your own choices that aren't surrounded by outside noise. You're on a solid foundation where you can be self-sufficient and self-sovereign in the crypto market, in the economic space in general. So that's really important. So I'm going to hop in a little bit to the institutional money. So, well, first of all, what do we mean when we say institutional money or institutional investors, right? So we're talking about companies that manage money for other companies or for people. So large companies send money to investment firms or money market firms or whatever the case may be to invest the money for them, right? Money management firms. And so they take all of these trillions of dollars or billions of dollars, depending on how big your investment firm is, how many assets you're managing, and they decide where to invest those. Now, right now, they can't choose to invest those in Bitcoin. Well, not really, because there's no Bitcoin spot ETF. And what does that mean? That means that they can invest in Bitcoin based on its current market value in that moment, right? So it goes up and down just like the stock market. And so their portfolio would go up and down just like the stock market. So once a Bitcoin spot ETF were to get approved, now the institutions are able to funnel their capital or their money that they think is appropriate of their customers' funds into or adding Bitcoin to diversify their portfolios already, right? So they might have gold, they might have bonds, they might have stocks, they might have whatever money market funds within their portfolio that they're managing for their customers. And so if a Bitcoin spot ETF gets approved, now they're allowed to add Bitcoin into their portfolios. So we say, okay, that's great. What does that actually mean for the market? And if we look at just the top 10 asset management companies in the United States, they manage almost 70 trillion with a T, $70 trillion in assets. I mean, it's an unbelievable amount. And that's led by the #1 asset management firm in the world, known as BlackRock, who have a lot of say over what happens. And it's funny that they're the first ones, not the first ones to apply to a spot ETF, but the first ones in a while after Fidelity and some others, spot ETFs for Bitcoin were rejected. BlackRock now comes in and says, okay, we're the big boys in the market. We're ready to play. And so when the big boys in the market are ready to play, not that Fidelity isn't, they're the #2. But there's a big difference between BlackRock and Fidelity from how much government, I don't want to say control that they have, but how much influence they have on the government. So Fidelity is the second largest by far. They're around 7 trillion in assets. BlackRock's about 8.5 trillion. But BlackRock has said that they want to increase their asset management, their ETF asset managements from around 8 trillion. And they see that increasing to about 15 trillion within the next 5 years. And really, they're saying in the next 3 to 5 years. Originally, they were saying by 2025, but they've pushed that out a little further because this bear market has stuck around, I think, a little bit longer than people anticipated. And so they've changed their projections of when they're going to hit that 15 trillion. But they want to double their ETF assets in a matter of 5 years. That's incredible. So where are they going to put that money? And even if they don't increase it right away, they still have to diversify that 8.5 trillion. And every other large investment management firm in the country is going to follow suit. We've already had four or five other asset management firms file for a Bitcoin spot ETF after BlackRock led the way, and the others are just going to fall in line. It's just that some of them may have missed the gun, and this is why they're the smaller guys, right? This is why they're not BlackRock, because they're not the market mover, they're the market follower. And this is what we don't want you to be. We want you guys to be the market movers. We want you to move before the market moves, not after, because that's when you get caught in a bad position, and that's when you get caught in a bad plan. If you just start buying as things go up because you want to ride the waves and it's exciting, and believe me, I've been there, I've done that. That's not a way you're going to make money last long term. It's not sustainable. That's honestly the way you're going to get wrecked. And so that's why we want to share our experiences and ours with you. So $70 trillion. If you take just
Brendan, before you move on, I just wanted to make a few comments. Malik actually made a good point. He said that if BlackRock was a country, they would have the third largest economy in the world. So think about that, right? Number one is the US. Number two is China. Number three would be BlackRock. Right? Brendan said they hold about 8.5 trillion AUM, right? Assets under management. Now, some estimators actually put them anywhere between 9.5 to 10 trillion.
Yep. Now,
imagine if BlackRock were only to put, let's say, 5% of their assets into Bitcoin, right? Let's say, 500 million, or sorry, 500 billion, right? That'd be 5%. The total market cap of cryptocurrency is currently is it what 1.2? Is it 1.2 trillion? Right, Brendan?
Yeah,
right, 1.2 trillion.
1.2.
If BlackRock had the goal, like Brendan said earlier, they had the goal of increasing their assets under management from 8.5 to 15 trillion, right? So that's about a double. Where do you think they're going to have a great opportunity to do that in cryptocurrency, right? What's the meme in crypto? We don't get up out of bed for anything less than a double. Where if BlackRock wanted to double their assets under management, where they have a pretty damn good opportunity putting that money in crypto and doubling it within what, the next 2 years, right? 2025. That's easy. And that's only if they put their money in Bitcoin. Imagine if they were really fast at, okay, our Bitcoin ETF gets approved. Let's file for a Ethereum one right after it gets approved. Imagine if all of this happens within the next 2 years or so. If Bitcoin can give them a double within 2 years, imagine what happens if they have their hands in Ethereum too. So, I mean, it's you know what annoys me? I think we spoke about this just the other day, and you kind of touched on this earlier, right? That these guys are trying to fudge you out of the market, right? But we all know exactly what they're doing behind the background. I guarantee you, when Larry Fink was talking shit about Bitcoin in 2018, they were buying, right? And recently, I don't know if you guys saw JP Morgan. I shared this in the chat. JP Morgan was saying that even if a spot ETF gets approved for Bitcoin, it's not going to affect the market significantly. I'm like, bro, like, what are you talking about? Do you see what happened to the price? It was like a 27% increase from our swing low by an official filing. This was an official filing. What do you think happens when the rest of traditional finance, who are inherently conservative with investing into highly speculative assets like cryptocurrency, what do you think happens when the prime market mover says we are now investing into Bitcoin and it gets approved? Like, what do you think is going to happen? You think that's not going to have a significant effect on the market? Like, are you dumb, JP Morgan? Right? Anybody with a modicum of critical thinking ability skills can tell JP Morgan is not stupid. What you're being disingenuous when you make that statement, right? You're trying to get everybody, you're trying to FUD the market so that people sell, you buy in lower, and so you have a more centralized amount of Bitcoin and Ethereum, right? So don't let these people fudge you out of the market, like Brendan was saying, because they're saying these things knowing that the average Joe and Jane is going to get flooded out of the market. You know, yo, what up, Boogie? I see him in the chat. But yeah, that's all I wanted to say, bro. Because man,
we're passionate about it. And Jay, I want to kind of reiterate. Not only are they going to want you to sell, right? They want you to sell your assets so that they can buy them cheaper. But then, as it starts going up, and you want to buy back in because you're like, I'm on the hype train. I'm back on the hype train. Well, what happens next? They're going to dump those high prices right into your lap as they sell and take profits, and then you get wrecked, right? And so that's why it's really important to have a plan and understand what your goals are, and make sure that you're paying attention to the market all the time. I'm looking at the market not daily, but multiple times a day. And I'm looking at what my plan is multiple times a day, because that's going to change. Maybe not daily, but it's going to change sometimes faster than you want it to, because the crypto market doesn't sleep. It's 24/7, 365. So if you're not paying attention 24/7, 365, then you're going to miss opportunities, or you're going to just end up, not in a position to take profits, or you're going to buy when you shouldn't, and then you're going to get dumped on.
Yeah, that's actually a really good point. If you guys notice, right, what do? They fudge you out of the market so they could buy they could buy back in lower. And then when price starts running, they dump on your head. And so you buy the top because they dumped on your head, you sell, and what do? They take the capital that they just took profits of, and then they buy back even lower. So it's like this is exactly, let me go ahead and highlight this comment right here by Trolling Moling, and he says, does that mean BlackRock is going to control the market? This is exactly the reason why they're trying to fud people out, right? Because the more they fudge you out the market, the more centralized, like the more market share of both Bitcoin and Ethereum they're going to hold, right? JP Morgan says it's not going to affect the market. Well, we know that JP Morgan holds quite a significant amount of the infrastructure surrounding Ethereum, right? And so you should not let these bigger players fudge you out of the market. Anytime they say something, you should probably do the opposite, right? If JP Morgan is saying the spot ETF approval is not going to do anything significant for cryptocurrency as a whole, you should probably be buying more Bitcoin, right? So.
Yeah, and I got a little bit to add to that too. You're completely correct about how the way that these markets have traditionally worked, even in like the stock market, housing, all that, right, is actually very hilarious. The way that, unfortunately, normal people are usually used as exit liquidity. And then we're starting to see this happen, not just as like scummy scammers in crypto, but now as the actual institutions are coming in, we're starting to see it happen again, only on a professional level, if you know what I mean by that, institutional level, right? Ultimately, what ends up happening is that you get the governments who are helping out these large institutions, and they all come together like this, right? They're like, okay, so let's make some laws to try and like build a fence around what it is that normal people, the sheeple, right, can do. Okay, all right, we're gonna build that fence. Cool. Well, now we're outside the fence doing whatever it is we're doing, but we're going to kind of rein them in a little bit. Okay, now in reining them in, it's like, all right, don't worry, guys. It's nice and safe inside of this pen. Cool. And then obviously people go in, right? And they're like, cool. Now, when that happens and they're inside that pen, they're spending money, right? And people can make money. Yes, they can have retirements and stuff off of this. That's cool. It's like it's the wonderful life that the utopia that all the powers to be are trying to build. Fun. But I don't like it when somebody's rigging it, I'd rather take self-custody, I'll my fucking future, you know what I'm saying? So ultimately what ends up happening with these is that these institutions start building these fences, and then they take all the money for themselves, and then they're like, oh, you want some here, you can have some, you can have some, you can have some, and then they get a little bit of the profits off it, right? Like taxes, right? Government taxes. It's that type of deal, or fees in large banking institutions. It's always the same. It's happening now. Is it a bad thing? I would say yes. But I mean, it's going to happen anyways, guys. And here's the other thing too. Normal people are so used to this. The other like 90% of the world is so used to this type of thing that it's technically good for us, because we're that outside factor that is, we don't believe in the normal system. We're trying to do it outside the normal system, and we got in so early with crypto. And there's still time, by the way, but we got in so early that now that the normal 90% of people are going to be coming in and be like, oh, this is a great little thing. This is much better than the stocks I would normally buy, right? Okay, good for you guys. We know what is really up, though. That's something that's really important for everyone to understand who's watching us and wants to learn more about crypto when it comes to like, hey, there's something going on here, especially going into the next bull market. We really, 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 really need to be looking at, yeah, this is a big deal. Okay, get yourself prepared. All right.
Hey, Brendan, I got a quick question for you. So Nate brought it up, and I think this would be an interesting discussion. I've been seeing a lot of videos on YouTube debating whether institutional money like BlackRock coming into the cryptocurrency space is actually good. On one side, like for example, I was watching Coin Bureau earlier this morning. Oh no, sorry, it's actually Bob Lucas, his newest video. And he was saying, look, everybody knows how I feel about the institutional money coming into Bitcoin, right? I don't like the fact that it's going to centralize a lot more of what is supposed to be a decentralized market, right? But then you also hear other people, like for example, I was watching Rand earlier on Banter, and he said, look, if a ton of institutional money comes into the space, they're gonna buy my bags. So it's obviously good for price, but not so good for the fact that it's going to become a more centralized. It's going to centralize a lot more of the supply to big players like BlackRock, like Fidelity, like Vanguard, etc. So can you give me some of your thoughts about like whether, okay, is it good? Is it good that we're getting institutional money? Is it bad? Like, what are you guys' thoughts on that?
Yeah, I'll start there, Jay. It's a great question. And honestly, both sides have valid arguments, but there are a few pieces I think that they're missing. But I'll take both sides and I'll give you my opinion. So first of all, we don't want the government involved in our money. We want to be responsible for our own wealth. I don't personally want BlackRock to control what my money does. And I want it to be separate, and I don't want people to know what I spend my money on. I want it to be decentralized, as you mentioned. And why is that? Because centralized money is dangerous. What's the value of a dollar, right? The dollar is the most centralized money in the market, right? So what's the value of a dollar? Is it gold? No, we haven't been on the gold standard for a long time. The only value of a dollar is the might of the United States military. Because they can do whatever they want in the world, our dollar's worth a lot of money. That's the bottom line of what makes a dollar worth something, right? And at some point, if the United States government collapses or if the military might collapses, well, what happens to the dollar? Probably hyperinflation, which we've seen in many countries. So that's important to note. One thing that's different in the United States than other countries, we have a lot of guns, and we have stood up to the government in tyrannical governments in the past. Would we do it again? I don't know. But I tell you, in the EU and other parts of the world where guns are pretty much banned, they're never going to have any say over what their money is. Now, personally, I think institutional money coming into the market is good, especially for the short term and us seeing a price increase, because that's really what we want. And then I'm going to throw it back to you. So one thing that you need to also consider is what the other factors are. So we have Bitcoin, Ethereum, say those get spot ETFs, and those are more centralized. But now this kind of brings the low watermark of the overall crypto market up. So all of those altcoins, all of the other coins in the market are organically essentially buoyed or dragged up by the institutional money coming from Bitcoin and Ethereum, because now money is going to trickle into these other coins at a larger rate as well. And so now we're seeing all waters rise, even decentralized, more decentralized platforms because of institutional monies coming in to Bitcoin and Ethereum. And that's why personally, in a short period of time, because I could talk for a long time, why I think it's a good thing.
Yeah, no, I think that works perfectly. Overall, like, what's going to end up happening here is that people arguing this whole thing of like institutional money, good, bad, blah, blah, blah. It's always going to come back to the same issue of, oh, but the government's getting involved, right? Okay, yeah, we don't want the government, but we do actually. We technically do. We're early enough and we've done things in crypto long enough now where it's like, you know what? We want retail to start coming in. And enable for us to get retail to come in, we have to first make a deal with the devil, sort of, and have the government come in. It's the only way to actually get, because I'm sorry, guys, but you're never, ever, ever going to get like 80 to 60%, you know, just a huge number of retail buyers from around the world to just be like, oh, there's this random crypto thing that's been told it's a scam for the past forever. And some people get rich, some people don't, whatever. But is it safe? I don't know. You're never going to have that. People aren't just going to leave government and large institutions to go run into something that they may or may not get wrecked and they don't even know what it is. People, for the most part, are very, very bearish when it comes to that sort of thing, right? They're scared. I don't blame them. It's their money, you know, that this is money they can't lose, right? So I think personally that having governments and or large institutions getting involved in crypto is actually the best possible thing we can have, because at this point, crypto has two faces, right? You have the centralized face. That centralized face has the governments and like the majority of all the liquidity in there, right? Just everybody's going to it. But then you got the decentralized side of things. This decentralized side of things is where kind of, if you know what you're doing, you can play around with it, and everything here is going to kind of trickle into here, and everything's going to shoot way up just because of that, right? So I like whenever you get one of these arguments of like, oh, the government, good, bad in here, I'm like, are you stupid? Get more money into crypto. What the hell's wrong with you, dude? And like, I know, Jeff, I don't know if you got something on this for, but yeah, it's crazy to me that people be arguing this.
Well, basically, it can't be more centralized than the U.S. dollar. So if we're switching from the U.S. dollar to crypto and the government gets involved in crypto, well, people owned crypto first. People didn't own the American dollar first. So even if the worst possible scenario is they can only buy up so much, they'll never have all of it where they can monopolize and completely control crypto. That won't happen. So, I mean, from a standpoint of value, if you want more money, then yes, more money influx from no matter where it comes, it's better. I guess the only downside you could say is, yeah, like you said, in the future they can dump on your heads, but you know what? You don't have to sell. This is your money. If you want to use this as a store of value, which I do, I don't have a lot of money in the bank. No, thank you. I use it as a store of value. I'm not using this shit to just, you know, keep it, spend it. Oh, I've doubled my money. Okay, I'm good. No, I'm doing this long term, because just like Brennan said, what gives the U.S. dollar money? The government, the army, the military, and plus people. But people are starting to catch on, man. I know some older guys with like real deal money, like serious money, and they've talked to me about it. Like, hey, man, I want you to educate me a bit about it, because my buddy is friends with some upper ups in the banking industry. I'm not going to say which banks, but the biggest ones, and they're even talking about how liquidity is running dry, and they're worried. So I think a lot more people than are expected to flow into crypto are about to. Just look at Argentina. The inflation over there is so terrible, and people over time, no matter how difficult or easy or hard or whatever it is, they're going to want to do what's best for their money. So you're going to see all this massive inflation going. You think we're having bad inflation? Like, this is America. It's so much worse everywhere else. So people are going to start to get hip to the game. They're going to start investing. And like we were talking earlier about JP Morgan, they've been talking shit on Bitcoin for forever. But I could be wrong, but I read an article, I think it was like a month ago, when I think it was a year ago, that JP Morgan, blah, 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 Bitcoin, we wouldn't touch it. Price tanked. And within the next week, they had some like sister company that they like owned. Like it was their company. They were like the #1 buyer in like the world. So yeah, just like Jay said, whatever you hear, do the opposite. It's that when you're hearing about it, it's already too late. It's the Kramer effect.
Yeah, it's buy the rumor, sell the news, right?
Yeah, 100%.
And actually, so part of that buying the rumor, sell the news, actually, I kind of want to go on about is the ETF, right? So the most hilarious thing about that is the fact that people would think that that's a bad thing, but yet you do, like, anybody who's listening, right? You do realize that this ETF is going to bring in retirement money. What is the number one like large pot of money we have currently just waiting around? It's literally, yeah, exactly, Josh. It's literally the money from the boomers. What made BlackRock? Boomer money. Okay, maybe we want that in the crypto space. If we get that amount of money, could you imagine, like, people want $1 million Bitcoin so bad. Well, if you want $1 million Bitcoin, you're going to have to make a sacrifice. That sacrifice is going to be the BlackRock boomer money. You need to allow that. And so anybody who's going to be fighting this, like, oh, it's a bad idea. DeFi, decentralized, is going to always be a thing. Monero, go buy Monero if you want to be so decentralized, right? It's a great coin. And it is the literal definition of what crypto originally was supposed to be. Even Bitcoin isn't the original definition of what it was supposed to be anymore. Monero is. If you want it that bad, go buy Monero, okay? But here's the thing. Crypto is a currency that can be used in real life now. This is real life, okay? This isn't magical internet money anymore, okay? We're moving more towards real life. And so you guys need to understand that, yes, you want the institutions to bring the money in. Here's the thing. You want to make sure you get your bags before they actually get in here full force. You know what I mean? So, yeah, Brennan, what's your take on that?
Yeah, Nate, I think you said it really well. I think that it's inevitable. And if we really want this market to grow in the way that we want it to, and I'm going to do a little bit of, I don't want to call it moon math, but I want to give some potential of how much we could see of an increase because of the institutional money coming into the sector. But first, Jay, I just want to kind of hear your thoughts on this because I think you might have something to say too.
Well, me personally, I say bring it in. I say bring in as much money from traditional finance as possible into our space, right? I want you to buy my bags, right? But you also have to be hyper aware of the fact that if you want to be the person who's selling at the top on BlackRock, on all these other guys, you have to front run them, right? And so it's like we've been speaking about it kind of for the last few minutes or so, is that you can't let them fudge you out of the market. When they're telling you not to buy is precisely the time that you're going to need to buy, right? You need to front run them. Nate mentioned what's happening in other countries. Like, oh, actually, sorry, it was Jeff who mentioned what's happening with other countries. Oh, the U.S. is imposing a not so friendly regulations or lack of regulations, lack of clarity with regulations on crypto. Well, you know what? Please come bring your business to us. Binance, bring your business to us. Coinbase, bring your business to us, right? Because anybody can see, oh, you mean there's only going to be 21 million Bitcoin ever? Well, that's a finite resource. The US doesn't want any of it, but the rest of the world seems to be accepting it. Please bring your business to us. So what are other countries doing? They're front running the US when it comes to crypto, right? Don't let that happen to you. And so bring in as much money as possible from these traditional financial institutions, but front run them like other countries are doing. Buy when the prices are low, sell on them at the top, and then once you've sold on them at the top, buy back in your position when prices come back down. And so if you're worried about cryptocurrency becoming more centralized, well, then the impetus really is on you as an individual, right? If you don't want that to happen, I'm not saying never take profits and just hold your bag ad infinitum. Sell at the top, buy back in lower, and buy back in a bigger position lower, right? That way, you as an individual can actually be confident and you could sleep well at night knowing that you're not allowing these centralized entities to buy your bags, right? To buy your Bitcoin, right? Take profits, but buy back in lower and accumulate more. That's really the only way that you as an individual is going to help prevent that from happening, right? To help prevent these big companies like BlackRock to have a monopoly on the total amount of Bitcoin, for example, right? So that's where I stand on it, right? I want you to buy my bags, but I'm not gonna let you fund me out of the market, right? Because I want to hold crypto versus fiat. So that's my personal take on it.
Yeah, Jay, and vice versa, just on the opposite end of that. If you were buying when the FUD is the heaviest in the market, then when are you selling? When they're telling you it's going to go to the moon, right? So what happened in the last bull market? The last bull market, we hit almost 70,000, right? About 67,000 and change for Bitcoin. And every single person in the market was saying, oh, we're hitting 100. Don't sell, we're hitting 100. I didn't sell. We know this. I've talked about this. And that was one of my mistakes when I was in heavy profit back then. And I took some profits, but very, very little, and nothing compared to how much I lost as I watched it go down. Now, I only lose it if I sell, right? As long as I can hold it for the next bull market, then I really haven't lost anything. But again, you also have to take the opposite side of the FUD when people are just like, everyone's ready to buy in, and that's when the big guys are going to start dunking on your head. So, man, that's why you got to take profits as the prices go up, and you're going to know what your profit points are. That's really important. So before we move on to retail, I just kind of want to just think about this, right? So
you're muted.
Sorry? Oh,
muted.
Mute myself.
Hey, Brendan, looks like Cassie over here can relate to you just fine.
Cassie, 100%. But guess what? I'm still in the space, and I've learned from my mistakes. And that's what's really important, is to take all of the lessons that you've learned and help your future. What we want to do here at the Degen Roundtable is take all of our collective experiences in the market, both good and bad, and share those with you and with everybody else, so that if you haven't made the mistakes, maybe you don't make them so bad. You're always going to make a mistake. That's where growth comes from. True growth comes from scars. And scars will provide you the fastest amount of growth, but we don't like seeing scars. We don't like seeing people get wrecked. And so we want to share our information with you as much as possible, so that doesn't happen. So we're really happy that you're here and listening to us on our first live show. So we're really excited where this is going. But take that 70 trillion and say we add over the next, I don't know, 2 or 3 years, Bitcoin spot ETF gets approved. We have the top 10 or 20 in the United States asset firms applying for spot Bitcoin ETFs. And then we get the Ethereum spot ETF. And so now we're increasing a more percentage into the market. So what's a realistic market cap for crypto, just from an institution standpoint? Well, first, let's take the previous bull market. We hit 3 trillion in market cap. So without adding any institution in the next bull market, we should probably close to double that, right? That should be maybe 5 to 6 trillion minimum, without adding any additional factors. So now we add 70 to 100 trillion dollars worldwide being added in, or a percentage of 70 to 100 trillion dollars being added into the market. And now we go from a potential double in market cap from 3 to say 6 trillion. And what if they just put 5% of 100 trillion in? That's 5 trillion, right? That's a lot of money. And what if it's more than that? Because they want to increase BlackRock almost double, as we talked about. So we're not talking about 100 trillion in 2 or 3 years. We're probably talking about 150 trillion, right? And that's the type of assets that they're now managing in the next bull market, because everything is at depreciated prices in the market cap that we're currently talking about, in the prices of their assets that they are currently holding. But when these assets all start to go up, so does their market cap, right? And so do the dollar value of the assets that they're managing. So we could be talking about 200 trillion realistically in institutional money that's being managed by these asset firms in 2 to 3 years. So we're talking about an incredible amount of money that can be pumped into this market through Bitcoin and Ethereum spot ETFs. And if that leads then to a retail increase, which it will, which we're going to get into here in a minute. Now, institutional money makes up about 80% of the market. So that means 20%, which is a sizable chunk. 20% of the market are what we call retail investors or private investors like us, right? People that are managing their own money and investing in crypto or stocks or portfolios that they manage themselves. And so 80%, say it gets up to 200 trillion, 20% of that, we're adding, another 40 trillion, right? So we're not talking about a potential small amount of money when it comes to retail. Retail also moves to the most popular thing that's happening in that day. So if crypto gets regulated properly and pushes retail more into the space, then we're talking about an incredible amount of money, an incredible increase in market cap that crypto can do in this next bull cycle, leading to potentially a potential for the largest growth from bull market to bull market that we may ever see in crypto. This could be the largest bull market run that we, from a percentage standpoint, that we ever see in crypto. And we might never see those returns on investments again. Now, again, this is a perfect storm theory. This is a scenario that seems like it's brewing. It seems like we're starting to move into that direction. Now, who did these companies say that they want to hold their money? Binance. Who is currently suing Binance? I'm sorry, Coinbase. They're going to have Coinbase holding their Bitcoin assets. Who is currently suing Coinbase? The SEC. Now, put the dots together, and you, my friend, can follow this to the treasure map. Because why, if the SEC is suing Coinbase, would these institutions say, oh, they're going to hold my assets? They're the ones that are going to hold my money. Because it's FUD. It's not true. It's not true. And man, honestly, I am jazzed up about this. I'm really excited because right now we're at a 1.2 trillion market cap in crypto. So if we get to 10 trillion, that's a 10x of current prices, right? Now, some coins are going to do 100x's or 1000x's, and some coins are going to be a little bit softer. Bitcoin's been in the market for a long time, so it'll be the first run, the first mover, because all these institutions are going to need to buy Bitcoin to back their assets, but then all the other coins run. So I just quickly want to share my screen, Jay. I want to just give me 1 second to add this present. And I want to just show a Bitcoin dominance chart. Let me know when you can see that. Jake, can you just unmute and let me know if you can see my screen?
We can see it.
Perfect. So here you can see that currently Bitcoin dominance is about 51%. So half the money in crypto is in Bitcoin. Now, prior to all-time highs, before the market really started to shoot up, right, in 2020, Bitcoin dominance is here in the 60s, 60%. So Bitcoin's price going up, Bitcoin's the first mover in the market. As the whole market moves up and altcoins become popular, people are now moving money from Bitcoin into altcoins. And where did we see the high? On November 8th, so right around here, November 8th, 2021 is when we see the market high. You can see Bitcoin dominance is at a very low point, a very, very low point. And so this is something that you also want to take into consideration, that Bitcoin is going to move first. And then as money pours in from institutions, it trickles out into the altcoins and it raises those. So that's Bitcoin dominance is a really important factor. And this is why if we start to see these CPI and we start to see a dip, we'll start to see Bitcoin dominance to continue to increase here a little bit. And why has it increased? Well, the news of the spot ETF, right? It's been increasing in dominance for a while because it's the first mover, but it's increased in dominance a lot since we started talking about these ETFs. So that's all I want to share on that right now. And we'll get into retail. But Jay, is there anything you want to, or anybody else want to add? Anything? Just 1 minute to that.
Yeah, you actually brought up a good point there with how Bitcoin dominance in general affects the altcoin market. Because Tate over here, let me go ahead and share his comment. He says here, how does a Bitcoin spot ETF affect the altcoin opportunities? Well, you know what? In general, once a huge influx of capital comes into the market because of the Bitcoin spot ETF, the reasonable assumption is that Bitcoin dominance is going to increase, right? Because there's going to be a significant amount of capital being funneled into Bitcoin from these traditional markets, right? And from the people that they hold the assets of. Now, the general reaction of the market is when Bitcoin dominance increases, altcoins tend to bleed, right? And so if you're looking at the charts, you should keep an eye on at what point does Bitcoin dominance head up to where it's starting to get resistance, right? Because once it starts heading up there and you see, okay, it's getting close to that resistance level, I believe it's around like maybe, I think like 55% or so until it starts hitting resistance. What people are going to do is they're going to take the capital, the gains, right? The gains from Bitcoin, and then they're going to start funneling it back into altcoins. There's a reason why not just us, like for example, our mentors, Charlie and Miguel, and other people within the space, the people that actually want you to win are going to tell you, hey, look, if you want to hedge against the volatility of this market, what you're going to have to do is buy Bitcoin first and then buy Ethereum, right? And the reason for that is because when price starts moving, Bitcoin is always going to lead the market first. And then what happens? Well, once you've made some significant gains in Bitcoin, and then you can start funneling the gains into altcoins, right? If you were somebody who's like, look, I'm not going to put any money into Bitcoin, I'm not going to put any money into Ethereum, I'm just going to go full degen and then put all of my capital into altcoins. Well, when market starts moving, you can make this observation with you too. Like for example, let's say we get the positive CPI next week, right? And then the market starts to run. You'll notice that Bitcoin is running, but Ethereum and altcoins are going to start to lag. So you can make this observation yourself, and that's precisely the reason why we encourage you to buy Bitcoin and Ethereum first in your portfolio, because they're going to make a move first, and then when you make gains there, then you can funnel some of that capital into the altcoins, right? But to answer Josh's question, that was a very long-winded way of saying that. Look, if the spot ETF gets approved, money is going to flow into Bitcoin first, right? That's going to push dominance up. Altcoins are going to bleed slightly, but what's going to happen? Once dominance starts to hit resistance, they're going to start taking that capital. They're going to funnel it into more speculative assets, right? First into Ethereum. And then once Ethereum has finally hit some resistance, then it's going to start funneling, like it's going to trickle down, right? They call that trickle down in economics. That capital is going to start trickling down the ladder into more highly speculative assets, right? And in general, that's probably how you should be playing the market too, right? Because there's very few people who are going to be like, there are going to be some altcoins that will run along with Bitcoin when it starts to run. The likelihood that you're going to guess which altcoin is going to run up significantly along with Bitcoin when Bitcoin starts to run is very unlikely, right? But the higher likelihood that you're going to get wrecked doing that. So I don't suggest going that way. But hey, it's your money. You can do whatever the hell you want with it. It's just advice. All right, so not financial. That's opinion. My bad. But yeah, that's on that point, Brendan.
100% opinion, and like you said, don't take us as financial advice. But what does this all mean? It means that these institutions are about to pump our bags. This retail money coming into the market, we're going to talk about here in a second, are going to help pump our bags. So don't be without bags. Not financial advice. Another thing that we haven't talked about, and we will talk about a bit more as it comes, but, every so often, Bitcoin, we call it Bitcoin halving. Bitcoin, as you mine it, you get half of the rewards of what you got previously. Now, currently, we're expecting the halving for Bitcoin to happen in 2024. So what happens when you have the Bitcoin halving? Well, we've always seen a large increase in the market for cryptocurrencies. And again, Bitcoin is the leader. So institutional money coming in, Bitcoin halving coming in, making it more valuable because it's harder to mine. You're not going to get as much of it each time that a miner gets a reward. We have retail money coming in, and then hopefully we have good, healthy government regulation, which we're going to get into here in a bit. And I know we're kind of running a little bit long on this topic, and so I think we'll move on. But really, really exciting, and that's why you have to be ready. But again, do your own research and make sure that you can be self-sufficient in this market and understand the different trends. We'll get more into Bitcoin dominance. It will show some of those charts in the future. And, you know, everything that we talk about won't be the last time that we talk about it. And getting into projects early is generally important. The earlier you get into a project, the more opportunity you have to make gains. Bitcoin's been in the market for a long time. It's safe. It's a safer coin. Other coins may have the opportunity to make you a lot more money, but they also have an opportunity to get you wrecked. And so you have to understand what it means to put your money into those different places, right? And how much percentage of your portfolio you want to put in riskier assets. Some of that might depend on your age. You know, generally people that are older want to have less risk in their investments because they're closer to retirement. If they get wrecked, there's no way for them to make that money back up. But if you're younger and you get wrecked early on, you still have a lot of time in your job and working that you can make back what you've lost or you can wait for it to reappreciate. If you're 75 or 80 and you need that money right now and Bitcoin drops 70% or altcoin drops 90%, that's a challenge. But for me, if Bitcoin drops 70%, I can just buy more and wait for it to go back up. And so age definitely is correlated to how risky you should be in your asset management and your investing opportunities. Okay, so Nate, we want to talk about retail. So what is retail? We kind of talked about it a little bit. Retail is people investing for themselves, right? 20% of the market is retail. So what would allow for more people to come to the crypto market? What would it take for us to see an increase in retail investors wanting to put more money in this asset? And then we'll get into some of the regulation, how regulations are going to vary by state and by country. But from a retail standpoint, Nate, what do you see out there? What do you think?
Well, so basically, what would it take for a retail investor, you know, Seifu guy, to get into crypto? All right, so unable to do that, I'm going to paint you a picture, right? You got your old grandpa, right? And he's like, oh, you know, I want to move my money around, right? And you're just kind of like, okay, so yeah, maybe you should try this crypto thing out. So, oh, all I've heard is that it's a scam and people get scammed out of their money. It's like, no, grandpa. Don't you know that BlackRock has a spot ETF that you can just move your stocks over into? Oh, really? Wow. Yeah. And it's the greatest performing asset of all time. Wow. Let me do that. Okay. I'm pretty sure that we're going to get a lot of retirement money in automatically right off the bat. There's so much retirement money that's going to be popping in that, as you say, Jay, with the trickle down economics, right? You're going to have so much people getting straight into like these ETFs and or just being like, hey, let me just buy the Bitcoin right overall, right? On one of the exchanges, say perhaps Coinbase or something like that, right? And it's like, it's mine now. I got my own Coinbase wallet type of deal. That's how it's going to work, by the way. They've got the exchanges, and then you got like the Seifu wallet that's connected to the exchange, right? This whole MetaMask thing, that's like, oh, that's that DeFi thing, right? The decentralized stuff. That's where the scammers and criminals go, right? People are going to be scared. Obviously, this is what retail does. And then the institutions make sure that retail knows that it's a very scary thing. So that way they don't go out there. But as you say, Jay, with the trickle down economics, people are, the safer they feel in one spot, the more they're going to start kind of pushing the boundary just a little bit by trying newer things. And it's slowly going to move down into other assets, right? And here's the deal. Bitcoin obviously is a no-brainer. The institutions are going to go straight into the Bitcoin, and then you're going to get all the people throwing their money in there. Well, here's the other one, though. There's another one that is so unbelievably safe to these institutions that they want to hit the Bitcoin first, just to say, hey, we're safe, we're super safe, right? Even though they've already got plans, hey, no, we want to get into all this. And that other one is going to be Ethereum. So as soon as you have all these Bitcoin ETFs, you're also going to be getting Ethereum ETFs. You want to know a little secret, guys? It's already happened. China is, or not China, sorry, Hong Kong is already rolling it out. In fact, they already have it going right now. They have a Bitcoin ETF going, and they're rolling out right now in Ethereum. China has literally gotten rid of their laws against it, specifically because they're positioning themselves where they're like, the second that we see that Hong Kong is like a big deal and it's working, all of China, right? All of China can do it now. This is going to bring in so much money, guys, so much money, because I'm not going to lie, the United States is lagging. United States is really lagging. And the second that we get a spot ETF for Bitcoin just approved, or not even approved yet, but just mentioned, like, hey, I think we're filing for it right now. You have all of these companies now doing the exact same thing. As soon as it gets approved, all these other companies are going to get approved. What's going to happen after that? They're going to be like, okay, cool. We got the Bitcoin. We got the Bitcoin. Now we're going to go to the Ethereum. All right. Again, they're going to try it out. Somebody gets approved. All of them are going to come in. It's going to be such a huge wave. I'm starting with the way that institutions are trying to hold down the retail right now. They're trying to scare retail. The way that they're holding them down, the way that I see it, is that we're just going to be crabbing like this, because retail has their boot, right? Institutions have their boot on retail, right? The second institutions like, oh, it's safe and awesome now, retail is going to flood in. Everybody, all of the, as I gave with that with Grandpa at the beginning there, right? They're gonna be like, oh, it's a safe thing now, right? A huge flood, and it's going to go up, just up and up, and we're going to have a very, very quick to the top type of deal, right? Bull run. And I'm seeing some really great signals happening here. I think, like, man, if you're not buying into this crabbing that we're doing, and even dropping all the FUD that's happening, you need to be buying, man. Like, this is a big deal right now. So, and it's unfortunate, because I do think that institutions will end up dumping on retail, because that's traditionally how everything has ever gone. I don't care if it's stocks, housing, cars, art. I don't care. The rich people come in and buy it up. Retail tries to be a part of the cool kids club. And the second that happens, they get wrecked, right? That's what tends to happen. But yeah, no, we're going to be going way up from here. So, yeah. Another important thing that I really wanted to bring up, and I don't want to take up too much time, obviously, but the presidential election, right?
I was going to bring this up.
Oh, yeah? Yeah. Well, how about this? You take it first. I got my own thing on it, but let's see what you got to say, man.
Well, when Brendan was going through the perfect storm, I was saying, well, when he was going through 2024, I was going to say, what else is happening? Probably the rate hikes are over, and probably the election. So it's literally, I hate to be cliche and sound like a broken record and copy Brendan, but by perfect storm, it's literally perfect storm. You have all these elements. And I was even, God, we already talked about the rate hikes. I don't want to get back into it, but I could even see the whole, even if they do a rate hike, that could still be bullish. If they do a 0.25 rate hike, it's okay. Well, shit, they've been doing everything they said they were going to do. Now, this is only 0.25. Well, they only got one more left. They might pause it. And retail is going to try to front run that. They're going to try to say, oh, they only got one more rate hike? Well, it's not going to drop that much. Let's get in now. So, honestly, I think as long as when they do the next rate hike, if it's not anything over a 0.25, the market's going up regardless. But no, as you were saying with the whole presidential election, that's just something else to add to the perfect storm.
Yeah, and here's the cool thing about that, right? So We're looking at basically 4 candidates, right? Obviously, Democrat, Republican, right? Now, there's 4 candidates that we're looking at. Okay, so we're looking at Joe Biden, right? What was it? Robert Kennedy? I'm trying to remember his name, but Kennedy, right? And then we got DeSantis, and then we got Trump. Trump NFTs, baby. Let's go. But so when you're looking at these, like, how is this going to affect, number one, crypto, number 2, the retail of crypto, right? All right. So if we get Joe Biden, it's all over. We're all going to zero. No, we're done. He's so anti-crypto, it's ridiculous. It's not. I don't even think it's him.
It's the puppets that are moving him. They want currently for us to be anti-crypto.
Yeah, and that's the thing. Oh my gosh! Like, I swear, it's not even. It's like Joe Biden. Is he really Joe Biden? Like, I see a husk there at least. Sleepy Joe. But then we're looking at Kennedy. Now, here's something interesting. So I think Kennedy, for the first time, I might actually vote Democrat based on him. This guy has definitely, he's really taken on all the way back to John F. Kennedy, his was it great uncle, I believe it was. Like, he's really, really, really all about, hey, we want individual freedoms, right? We want to make sure that we get government out of things. I'm like, you're a Democrat, dude. What on earth are you talking about? Like, this is really weird, but he's very popular right now, and they're definitely looking at having him be one of the front runners, right? So he knows crypto well. In fact, out of everybody, he's the most. He knows crypto the most, which is kind of scary, considering he's a Democrat. But
well, he's an old school throwback Democrat. There's a big difference.
You're right. See, that's exactly it. So when I mentioned when I mentioned John F. Kennedy, he's trying to be like that. That's what's really cool about that. And so he wants freedom for the people, and he wants it. He wants it through crypto. Like, he's talked about this quite a lot. But that all being said, let's get to the other guys. DeSantis is also a American people first type of president, right? He's so bullish on trying to get people free in this country, the freest country on the planet, right? That he straight up has already passed a ban on CBDCs, central bank currencies, right? Like, he's already done that. Now, does it mean that it's actually going to be banned? Probably not. They'll find a way around it, right? It's what they do. But he flat out has already done that. And he's just like, no, screw you to the government. I'm going to do what I'm going to do. And look, if you go through the stats in the past 2 years on when he started versus where Florida is now, it's night and day. It's unbelievable how much better Florida is doing, just because this guy's like, hey, how about, free people act like free people and we don't try and suppress them. Wow. Right. The other thing, though, too, is going to be Trump. Now, Trump is so iffy. Like, he's a traditional finance guy, and he wants traditional finance ways, but he's also a freedom guy. He wants the American people to be free, to be American, right? He's so on the fence that I would almost call him a neutral party, because he knows about crypto. He's done crypto. The Trump NFTs, baby. Pump my bags. But I'm a bit iffy if he really truly knows what crypto is. And if you have somebody who brings a bill across that's harmful to crypto, he's going to look at it and be like, approved. I'm a bit iffy on Trump when it comes to that. So my personal vote is going to go, hilariously enough, either to Kennedy, a Democrat, and I live in a Democrat state, like deep blue state, but I'm a Republican technically. But I don't know, DeSantis or Kennedy. I'm like this as far as they go. So, but what does that mean for crypto pumpamentals? Okay. Obviously, if it's Joe, it's all going to zero. Let's just shoot him out of there, right? If it's Trump, if it's Trump, I think things just kind of continue on as though the presidency didn't really matter. That's kind of the way that I'm viewing it.
During his presidential run, Trump was initially fairly anti-crypto because he's very pro US dollar, right?
Mm-hmm.
But I think it's fairly obvious that over the past year, with the release of not only the version 1 but version 2 Trump NFTs, and then Melania releasing her own NFTs, I think that there's going to be a paradigm shift in terms of how Donald Trump as a whole treats crypto. And here's the thing, though, right? You got to realize that anything that the overwhelming majority of the Republicans approve of, the left is probably going to disapprove of, right? I think that's the reason why they're bagging on RFK, because RFK is a classical liberal. And so if the right has realized that crypto is about self-sovereignty, right? And so I think the ricochet effect, right? It's like the knee-jerk effect of the left is they're going to be very anti-crypto. And I think if Trump wants to get as many votes as possible onto his side, I think he's just generally going to flip his stance on crypto because the left doesn't like it, right? Even if he doesn't personally think too much of it, I think because the left pushes against it, he's going to accept it. And I think the fact that we had his NFTs version 1, version 2, and now Melania, I think that's a pretty good indicator of exactly where his position is going to shift into. So,
no, I think thank you for actually saying that. Yeah, no, that's so when you're creating the overall picture, right? So a painting is never made by looking at the whole picture. The painting is made one stroke at a time, right? And so when you start bringing in all these strokes, you can paint a picture. Joe, I think at this point is basically out of the running. I don't think he really exists. If you just look up like Joe Biden, not even being human compilations, it's a good time when you're drunk, right? But like, I don't think that's going to happen. There's a lot of more pro crypto senators coming in. Crypto is actually starting to go on the rise as far as acceptance goes in the White House, right? So I think you're correct, and sadly, I think you're spot on about Kennedy. I think overall his own party is not going to be happy with him, and I think just his fan base, his Democratic base is not going to want him around. I think he's popular enough where, at least there's some kind of running, but I don't think he's really going to go anywhere. So I truly, especially considering having Joe in, I think it's going to be between Trump and DeSantis, and it's going to be a Republican in, because this is very historic, the way that this always goes in any U.S. election, right? Blue, red, blue, red, blue, red. Okay, we get it. We're looking for red now. All right. So the ones we truly need to take seriously, like I wish we could have Kennedy, truly, but I don't think there's enough there happening that we can actually get him, right? So when I'm looking at things, just all the strokes put together, making a picture, I'm like, okay, it's looking like we have either DeSantis or we have Trump coming in, right? If it's Trump, I have faith that Trump would take care of the American people, and that like CBDCs are not going to be a real thing, because I know he knows enough about crypto where he's not going to allow that to happen. But truthfully, I think I would want DeSantis, because DeSantis has proven himself overwhelmingly that he's out for helping the American people. He says, now one thing I'm sus on him about is that he says he knows crypto well, right? He says that, but then he's on panels being like, oh, when they do a Bitcoin thing, I'm like, what? You don't do Bitcoin, bro. Like, do you really know what you're talking about? No, what he understands is the idea of crypto. He doesn't understand what crypto is entirely, but he understands the idea of crypto, and he very much loves the idea of crypto. That's what got that is what has me really thinking like, hey, this is the guy. I would say out of everyone, I would want Kennedy first, but I think that's unlikely. Second is going to be DeSantis. Third would be Trump, right? And what that's going to do is when it comes to Trump, I think we'd have like a normal bull run plus the institutions, right? And it was almost like truthfully, I don't really think it's gonna be too big of a thing. Pump mental. If we have DeSantis though, and DeSantis starts like trying to get rid of anything that would be fudding and or harming crypto, yes, we are going to be pumping a lot harder just because of that. If we had Kennedy would be like purposely trying to help crypto, right? And then it's like, oh my God, are we fucking going to? We're not going to the moon. Who cares about the moon? We're going to Mars, man. Right? Like, but yeah. And so I think in crypto, right? What we want is Kennedy. Most likely not, though. If that's the case, we're going to be looking at DeSantis. And that's in the idea of trying to pump our own bags. You know what I mean?
I think you nailed it.
Brendan, what do you think? If you were to factor in whoever wins the presidential election next year into your perfect storm theory, are you in agreement with Nate? Do you think RFK would be the guy?
Well, it's a good question. You know, I actually live in Florida, so I see DeSantis and his decisions on a pretty local level, and I live pretty close to Miami, which is one of the most crypto-friendly cities in the country. Where's the Bitcoin conference every year? It's in Miami. Okay. We have tech conferences and crypto conferences here constantly. When I started to get into crypto, I went, the Cardano Summit was in Zurich that year, but they had a host party here in Miami where they rented out a whole brewery. And as long as you signed up, you could go to the Cardano Summit, meet other people within crypto, and it was completely free to go to. It was open bar, all you could eat. Okay, this is the top of a bull market, right? So keep that in mind. When things are going well, things are going well. But I've seen a lot of really pro things happen. Now, your point about does he know as much about crypto as Kennedy? No, probably not. But I care more about regulation than I care about how much somebody knows. And then I have to take into consideration outside of crypto, where do I align myself? I don't mind either. Now, this isn't a topic that we were planning to talk about today, but I love talking about it. And I think as the election comes closer, we're probably going to talk about it a little bit more because the election is important for the economic markets and where the markets are going to move after an election. But I don't think personally that RFK is going to be a lot better per se. I think both are going to be good for crypto and both are going to be positive to remove the centralized currency like CBDC. I haven't heard RFK talk about that, but he's so much. So I want to, and just skip this topic because we put a lot of time into it. We're at an hour and a half in, and we really want to try to wrap this up within 2 hours. Pickle Yard, do you have anything you want to add to this? And then do you want to roll into the start of regulation? Maybe give us a good 15 minutes, 10 to 15 minutes if you have that. Can't hear you yet.
We do it live.
We have a technical difficulty. So as he tries to get his mic working, I'm going to just kind of continue talking about this a little bit. So when we talked about earlier, what is regulation and why is it important? What would regulation look like? First of all, the question around crypto has always been, is it a security and therefore falls under the SEC's jurisdiction? Is it a commodity and therefore it's like a currency? Or is it something different altogether? And we need to create a structure or a framework to make crypto its own thing, right? Should we be trying to pigeonhole it into a security or a commodity? or is it something completely different? And this is something that I think is probably we'll talk more about in the future. But what would be best for it? Well, we know that it becoming a security would be bad, because anything the SEC touches, they want to centralize it. They want control over it. They want everything that they have. And then, we don't really have a lot of control. And then we're talking about, being self-sovereign, having our own ownership of our money, of our wealth, of our economic strategies. And so let's take that out. We know that Bitcoin's a commodity. That's pretty much what everyone's saying, right? Everyone's calling it digital gold. It's sufficiently decentralized as one of the terms that the SEC likes to use to decide if it's a commodity or a security or a commodity. But isn't it funny? Why do we use such gray area language? Sufficiently decentralized. What does that even mean? What does that even mean? And this is where the regulation in the thing about crypto has been challenging. Where does it fall? Who controls it? What's the regulatory framework? And what's it going to look like in the future? We know currently Gary Gensler isn't a big fan of crypto. He was a bigger fan of crypto before he started being the head of the SEC. It's funny how that works, right? He's not pulling all of his own strings anymore. He has people telling him what he needs to tell us what it is. And he says that most cryptocurrencies are securities. That's his opinion anyway. Now, we know that he may not be the head of the SEC for much longer, because both the Democrats and Republicans have brought up issues with some of his recent decision makings regarding crypto, regarding the markets. And is he doing it from a standpoint where he is fully away from it, or does he have a little bit too much skin in the game? So that's...
Yeah, and, to kind of add on to that a little bit too, you're completely correct. Like, regulations are going to... This is my worry, right? In the next coming bull run, and especially the bull run after, right? Because we tend to go off of cycles, right? What are the regulations going to be, right? Now, remember what I said about creating a pin, right? Well, they're trying to catch as many of us decentralized people, right, into that pin as possible, and they do that by setting out laws and regulations and things like that. Oh, you have to do it this way, you have to do it that way. It's kind of strange that their wording specifically is of gold, right? Hilariously enough, we crypto people have automatically been like, oh yeah, Bitcoin is digital gold, right? I think we kind of screwed ourselves on that one, because what is the SEC's favorite security? Gold. Okay, so now what I'm getting at here is that these traditional market people want to be looking at everything that we're saying and being like, oh, this is like gold, this is like silver, this is like the traditional market. And they're like, okay, cool, let's regulate it exactly the same. That's going to kind of screw us over in the end, right? And now that you have people like Larry Fink being like, oh yeah, no, it's digital gold. It's like, not only are they repeating the words that we've been using for a while, us crypto people have been using for a while, now they're starting to come up with these regulations where and what is it that they always do? They broadly expand the definition of things. They're like, oh yeah, if you're trading it, then it's definitely a security of some kind. Oh, what are you talking about? That could be anything. Well, yeah, whatever it is we say it is then. Okay, sure, that's fair, right? Like, no, that's dumb. And so the SEC right now is literally trying their hardest to pass a new broader definition. I love that word, of exactly what an exchange is. Because if they broaden it out to a certain point, an exchange now includes something like Uniswap, like PulseX, a decentralized, click your wallet in there and go swap coins, right? It's supposed to be completely decentralized, but now they're like, oh, but we're going to expand it out to be like, are you swapping coins? Oh, there we go. It's a security. Wait, what? I'm just swapping coins. What happens if I got a piece of gum, out of my gum pack, and my friend wants it? There you go. I'm swapping gum with my friend. Is that also security? Like, come on, dude. Really? And that's what they do.
Yeah.
They try to expand. And that right there, it's unfortunately what I see coming out of that, right? Coming down the pipeline is that this is ultimately going to be a catalyst for capital flight out of altcoins. Because anybody who's going into like some kind of altcoin, especially something like PulseX and all that, is going to want to be decentralized. The second it becomes centralized because of broadening what it is, it's like, okay, well,
yeah,
what's the point, So, hey, yo, Malik, you got your stuff together?
Yeah. So they overstep, is what you're saying, Nate. They overstep what they should be doing, what their actual job is. But regulation is important, right? Like, look at stable coins. People have gotten wrecked how stable coins work. And we need regulation. We need proper regulation in crypto. And so I'm going to send this right over to Mr. Pickleyard himself. Can we hear you?
Hey, what's up? Yes, hopefully. Can you guys hear me?
Yeah, if you could turn your mic up just a little bit. You're a little bit light, but other than that,
Yeah, for sure.
Clear.
All right, I'm a little bit closer. Yeah, I had to plug it in and unplug it, the wonders of technology. So basically what we got here is all of the government, basically all the organizations that are going to be enforcing digital currencies and regulation going forward. You've probably never heard of any of these people. Maybe a few of them sound familiar. Well, not people, but organizations. The ones in the middle are more governmental bodies, I believe, and then the ones going outside are more like institutions as well. So I mean, if you just look up, and we'll share this PDF in the comments or description below as well. But I mean, if you just go through this entire
Also
document,
our Telegram.
it's literally, yeah, and our Telegram, it literally just goes over their entire plan, basically what they're planning on doing. I mean, it's pretty scary. Here's another part of the roadmap. So, I mean, as you can see, they've already been holding meetings where they are talking about digital currencies. And what are these digital currencies that they're talking about? CBDCs, Global Digital Compact. What do you think that means? We're going to control everything. So they've already had this meeting. They've already had this meeting. And it looks like they're trying to end it by 2024, but then there's an extra meeting up here. So this is probably going to be the review where they're just like, hey, this is going to be the one you want to pay attention to, because if the CBDCs aren't rolled out by the 24th, they're probably going to have an issue with it in this meeting. And that's when you're going to see people start to panic, because they're going to have to be like, okay, we're going to put the pressure on you guys to get this done by 2030, because they're running out of time and they're getting desperate. The Larry Fink, the Bank of International Affairs, the UN general, like, they've already said that this stuff isn't working, so they want to get everybody into compliance. So this is why they are pushing all of this stuff so hard, so fast, because they really want you guys to be under control. Like, I have another tab to share. There's another PDF document. This is the ethics in the age of disruptive technologies, which the Pope himself has just endorsed it. So this is the high level of what they're going to be pushing for their ethics. And, you want to read through this stuff or find a YouTube video of somebody breaking it down. If you don't have time, listen to a podcast or something. There's plenty of people breaking this stuff down daily and constantly. And if you want to listen to it, or I mean, read through it, we'll post the link as well. Let's see, we got this as well. The oversight of AI rules for artificial intelligence from the U.S. Senate Committee on the Judiciary. So this entire video was basically OpenAI, IBM, and what's this guy's name? Gary Marcus, talking about AI regulation and what they're pushing for. and you can either, we'll post this link. You can come here, watch this, listen to it while you're working in the background or something, and you can hear what they're saying, because these Sam Altman, the OpenAI CEO, and the Christina Montgomery, the Chief Privacy and Trust Officer of IBM, are going to be the ones that you're going to need to talk to push regulation, and to make sure. I mean, OpenAI already has a few programs where you can help with regulation, which I'm also taking a part of as well, to, well, basically keep them from screwing us all uh, with regulation, because Larry Fink has already said that he wants to use AI for regulation because it can automatically control everything and they don't need to even oversee it. They can just click a button and it'll automatically just control everything. Like it's pretty scary stuff. Antonio, what's his face? Let me get the next one up. So we got the UN chief backs the idea of a global AI watchdog like nuclear agency. So the General Antonio Guterres of the UN, he wants to form something like the IAEA, which, if you don't know, is currently going in and out of Ukraine to try and garner peace talks with Russia over the nuclear power plant, because they've apparently detected some kind of explosives and they're trying to figure out what it is. So, that's something that you should probably be aware of if you're not aware of all the developments happening in Ukraine and the war in Russia, because it does kind of tie into regulation. So when it comes to the interest rates, I just wanted to bring this up real quickly. Part of the reason why they're raising interest rates is because it raises the interest rates of everybody. And it's like a double sanction, basically, like a double-edged sword to Putin. So they're trying to drain him by shipping out armaments so that he keeps funding the war, because they don't have any way to generate income other than fossil fuels, which sanctions are cutting off. So like they're really running out of ways to fund this war. And then on top of that, now there's a mutiny. So now Putin has to fund a war inside of the war. So you can kind of see how this is devolving very quickly, and how it kind of ties into where the regulators and I know Jerome Powell is going to keep saying, "Oh, we don't look at those factors." They do. They do. They get the go ahead from the government to raise rates or whatever, um, they see fit, because they all talk. They all have meetings, like I just showed you. They've had these meetings in place already, time and time again, 4 months on end. They are not playing around. Like, this stuff is happening in the background, and they're not even they're really being blatant about it. Like, really, the only thing we don't know is what's happening directly in those meetings. But I mean, they're telling us their sentiment. They're telling us what they're doing, and when they're going this far to tell us what they're doing, they're pretty serious about it. It's pretty scary stuff. It really is. Um, there's also, I'll show you this one. There's a few more articles that I didn't pull up from this GitHub repo that does like post news stuff, because he's pretty well-known AI guy, David Shapiro. Listen to him a lot for a lot of AI philosophy. He's been doing AI automation and machine learning technology professionally for like 15, 20 years. So he's pretty knowledgeable, like his content. I do disagree with some of the stuff he has to say, but just in case you're looking for someone who does talk about this stuff, that's a link that we'll also provide for you. And there's just, I mean, you can read what they're doing right now. It's pretty scary stuff what they're planning on doing. I mean, they're making a digital, and I'll stop sharing now. But they're making a digital passport, basically, like a digital ID, a literal digital ID, the UN, for a global digital ID for every person. Kind of based, like, you remember, I don't know if everybody here is aware, but in China during the pandemic, they gave everybody like QR codes on their phones for a digital ID. If you were designated as infected, you could not go anywhere. You were banned from entering any buildings. Now, imagine what happens when they do that globally. Oh, we don't like what you purchased online, so now your global ID is flagged and you can't go anywhere. We've also seized all of your funds because it's on our digital blockchain, FedNow. You see what I mean? You can kind of see, where they're kind of laying the bricks and what they're trying to build. It's not something that happens, immediately. Like Nate was saying, over time. This is something that they kind of seep in, right? It's like boiling a frog, right? How do you boil a frog? You slowly turn up the heat. You slowly turn up the heat. You're like, no, 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 it's nice and temperate in there. You like it? Yeah, yeah. Here, have some fries. Have some worms. You like that? Yeah, yeah. Eat the bugs. Eat the bugs. It's really comes full circle when you really look at what they're doing. And so, on top of that, Larry Fink has talked about using smart contracts. He's talked about using, this is what they're going to do to leverage using their blockchain with the Fed now. They're going to use it they're going to circumvent everything. So basically what they're going to do is they're going to keep raising rates. Jerome Powell has already said, I'm surprised there has not been a recession yet. He wants there to be a recession. Like verbatim, wants there to be a recession. It's really you can't even hide it. You can't even hide it. And so, I mean, Christine Lagarde, the head of the ECB, Jesus, I just like this lady so much. Oh my God, she's like the most. She's like I can't say that, but if she's like I'd
Almost as
say
bad
she's
as
like
Hillary
Joseph
Clinton.
Stalin.
Like
No, she's
almost
like
as bad as Hillary.
Joseph Stalin, but without killing people. Like it's really disgusting, the things that she says. Like she literally is pushing for famines, and it's just disgusting. But if you really read what she's saying, she's like, no, there's no recession, even though the EU has literally entered a recession. Like they are in a statistical recession, and she's saying, no, we're still very strong. That's not even our base case. She's just lying. They're just lying to us, and I mean, it's really blatant, the lies that they're pushing out at this point, because they realize that they can't keep up the facade anymore, especially with crypto and AI coming out, because both of these technologies they cannot control, and they want to get to a point of total control. So I do want to give this caveat. They probably will not succeed with everything, but they might succeed with some stuff. So it's good to keep in mind what they are aiming to do. That way you can prepare, and you can provide the knowledge to other people and be like, hey, we need to push against this. We need to learn what this technology is so that we can use it and utilize it, so that we can exit their controlled system into our own system that blockchain provides us with a trustless end-to-end user to user um, system, right? And that takes the middleman out, and the middleman being the central banks, the middleman being the government, the middleman being everybody who thinks you're too stupid to know how to use your own money that you've worked your entire life for. Like, isn't that sad? They really think you're too stupid to own your own money. It just doesn't make sense. So again, learning about these new technologies and staying up to date with world events, staying up to date with what they're saying, staying up to date, even if you don't understand it, finding somebody that is can break stuff down for you in a way that you can understand is going to be critical to staying up to date with information, because information is key. The reason why they say knowledge is power is because if you have knowledge, you can use preventative medicine basically to solve a problem before it happens, right? Like this is the art of war, basically, right? The art of information is key to winning a war. You need information. If you don't have geographical information, if you don't have the size of the opposing force, if you don't know what their supply chains are, if you don't know their routes, if you don't know if you don't know this stuff, you're going to lose to the people that do, and the people that are willing to get this information. And the people that are willing to get this information just so happen to have billions of dollars above you. So it's not that we don't have a chance. It's just that we have to work a lot harder to stop it, right? And part of that is just, again, learning about it and spreading awareness, because the more people know, the more that we can put in our own regulations or submit our own IEPs and whatnot to our senators and to our government regulations, so that we can have the laws that are actually user friendly and not, abuses. Like Amazon has so many lawsuits over unfriendly user consumer practices that it's ridiculous, and they're on the board for creating central bank digital currencies. So think about if they're already treating Amazon employees terribly, if they're already treating Amazon customers terribly, what do you think they're going to do when they own your money?
Yeah.
You can't take everything that they say at face value. So you need to educate yourself, and you need to stay well aware of the situations on all fronts, even if it's a lot. Um, because that's your protective coat, that's your armor, that's your safety net, is knowing what's going to happen before it happens, or what's likely going to happen before it happens, and informing others so that they can help you, so that they're there for you, forming a community and being with people that are like-minded and that, you know, are there for you and are there for the cause, which is, freedom. You should have the freedom to use your money however you please. You should have the freedom to live where you want to live. You should have the freedom to have your family and or pursue your dreams. Like it's as simple as that. You should have freedom, and they're trying to take that away from us in front of our faces. And I've laid it, and we'll provide the links to all these arguments or the articles so that you can see what they're actually saying with your own eyes, and you can provide it to other people as well, just so that you guys can stay informed. But since we are coming up on about 2 hours, I will head it over to the guys. I just wanted to give my piece and bring a lot of that information to awareness, because I see it. I have so many different news sources, and I see this stuff daily, and I'm just like, I have to talk about it, because it's just you have to spread awareness. That's how you fight it. You spread awareness.
Yeah, man. And honestly, that's fantastic info. And, you're deep in the tech sector. You're deep in the AI sector. And, that's what's great about the Degen Roundtable, is that we have a lot of people that have a lot of knowledge in different areas. And so we're going to not just talk about crypto and how that, but everything that relates to, the market and how can it affect you making money long term. You mentioned the government can just stop payments on your accounts. Well, that happened in Canada, right? The truckers were striking, and anyone that they thought that was a trucker in these blockades and these strikes, they just shut their money down. There was no going to a judge and saying, hey, is this person guilty? No, it was the government choosing, the prime minister taking control that was only supposed to be for times when they're being attacked under military times, and he used those laws to shut down bank accounts of people within his own country. And that's what you're talking about, where government can overstep and making everything just digital. They can control it at any time that they don't like what you're saying. And that's why crypto is such an important part of where we're pushing, and why we want everyone to understand what's happening in the world. And not everyone on this show, we all have the same opinions on everything. And that's also what's great. Differing opinions lead to more research and leading to more knowledge. And don't ever stop learning. Don't ever stop researching. And it's okay if someone has a different opinion than you. In fact, you might want to see if that opinion has some weight. I know in our current political climate, it's really hard for people to listen to somebody else's opinions on something. But in reality, you're doing yourself a disservice if you're not trying to look at something through every side in every part of the prism. So as you can see, scrolling down the screen, we are actually starting a Telegram chat. It's also in the description, so you can copy and paste. If you want to join our Telegram chat, it's just for people that follow us on YouTube. So if you subscribe, or just, by the way, please like this video, subscribe to us so you get hit the bell icon so you get our notifications when we go live. But this chat is so that you can ask us questions for free. If you want to know something about the market, if you're struggling with something, if you want to know how to get onboarded to start with crypto, whatever the case is, we want to use this chat to answer your questions in real time, because we stream once a week, and we want to be able to provide even more value to you than this once a week stream. And this free chat gives you the ability to do that. And we just created it, so it's just starting. So join, You can talk to us, even if you just want to say hi. But yeah, please join, like, subscribe. And the last thing is, we talked last week about we are starting a portfolio, and we are going to show over weeks and months a mock portfolio of what it would look like to DCA, right? So to slowly put money into the market over time and how that portfolio is going to do over the next year. We're going to follow this portfolio and we're going to DCA into different coins. And Jeff is the one that's going to lead us, on this. So he's going to give an example of how this is going to work. And then he's going to show the full portfolio of what coins we're going to DCA into, at least currently. Maybe those will change over time if our decisions and maybe the market changes, but currently what we're looking to do. And Jeff's leader on this. So Jeff, take it away, and hopefully we can finish up here in 10, 15 minutes. Thanks, Jeff.
No, thank you, buddy. Jay, let me know when it's up.
Gotcha. Before we actually hand it over to Jeff, I just wanted to make one final comment on Malik's regulation, his topics on regulation. Look, if you're the type of person who's really very against crypto regulation, the unfortunate reality is, in order for us to get significant adoption, there needs to be regulation in place, and so that these big financial institutions can actually invest in this space without having to worry about the lawmakers, in this case the SEC, coming after them, right? But if you as an individual, or for example, let's say the SEC came out with regulations that was very anti-crypto, right? Well, the reality is crypto is the great equalizer, right? And so if you want to have the capacity to be able to, like, let's say, if you wanted to move out of the US into a different country that has a little bit more favorable regulation to crypto, then you have the ability to do that, right? Because cryptocurrency is the great equalizer, and it's what's going to allow you to achieve a great degree of self-sovereignty. So if you're somebody who's concerned about the upcoming regulations of crypto, then that's probably something that you need to not only learn about, but also really consider when it comes to your future. So let's go ahead and hand it over to Jeff. Jeff, I'm going to go ahead and share your screen, okay? Let me know if you guys see it.
You let me know when it's up, bud.
Yes, sir.
Oh, we're good to go? Okay. So this is the portfolio we started. We went ahead and set up on CoinGecko, so it's a little easier to track. So far we're up. We started with 10,000 mock dollars, of course. And earlier today, I actually put pen on paper and figured it out. We're actually up a lot more, and then a couple things went down. But so as of now, we are $8.98 in profit over 7 days. So $8.98, that's what? Probably that's 8.9%, 8.98%. So let's take a look at everything. So honestly, the only thing that got us up is literally the Richard Hart ecosystem. You see the Hex right here, the Pulse Chain side. You got Pulse Chain and you got Pulse X. Yeah, those kind of dominated on the weekly charts. As far as thing to touch on, we're going to start doing a DCA of $100 a week. That way, the average person could, I feel like that's a good goal, not financial advice, to a starting point. So we're going to keep the same ratios, 20%, 20%, so on. So as of right now, let's say we wanted to add some Hex. Just go here. We'll go $20. That's your 20% of 100. That would be I think it was 1502. Yes, sir. Submit. And I'm trying to see if it updated. Holdings. Yep, we're good. No, it didn't update. Anyway, I'll play with it later. So yeah, this is what basically we're doing. Keep it up with the DCA, update it every week, so people can kind of get a feel for it, of how the system goes. And if anybody has any questions or anything all like that, just like they were talking about earlier, you got the Telegram group to hop on over to, and I'm always in there a lot. Everybody is always in there a lot. So It's a really, really, really friendly area, and honestly, there's no dumb questions because I remember when I started out, this was a foreign language. So yeah, if you have anything you want to ask at all, feel free to pop over. But as far as the portfolio, that's what we got.
Thanks, Jeff. Yeah, so we'll post also in the description what the percentages that we're looking at for each of those coins, or we'll be posting that again just so people have that information. But we're Bitcoin and Ethereum heavy, right, Jeff? So just like Jay was saying earlier, we want our biggest piece of the pie to be in the two main coins, Bitcoin and Ethereum. Which one you want a higher percentage in, that's up to you. If you don't think it's a good buy, that's up to you. Nothing we're putting here is financial advice. And we don't recommend, really following anything we're doing. But we're just trying to give you our opinions on things. And this mock portfolio is kind of just a cool way of us to show a starting point of when we started this show, really just a few weeks ago, and then follow what we might do from a portfolio standpoint. And in the future, maybe we take some profits on those and buy back later. And we're going to use this as sort of a real portfolio while continuing to add money each week. I know that I DCA on a regular basis because that's how I'm going to keep my averages and get more money into the market. But there's some better times to buy and some worse times to buy. There's some better times to take profits and some worse times to take profits. And that's where, understanding your technical analysis, understanding the market, the fundamentals, Bitcoin dominance, which we mentioned earlier. There's a lot of factors, and we're going to get into more of these things individually. But that's pretty much the cap on the show today. So please join our Telegram chat, which you can see in the description. Feel free to ask us any questions in there. There's no question that's too new or too expert, maybe. If it's just an opinion, we're happy to hear. If you want to come into the chat and tell us why our show sucks, that's fine too. If you want to come into the chat and tell us what you liked and what you want to see more of, we'd appreciate that because, we want to provide content that is helpful to everyone. We started this channel because we just started having calls every week together talking about crypto, talking about the market, literally talking about what we are talking about right now. And so we just said, hey, we could just record this and share this with the world. This would be really great free information for people. And we hope that it is helpful. We hope that it's helpful, and we hope that we continue to grow. So please let us know what you want to see. Join our chat. And if you are in our Telegram chat, we are going to have in the future our, I don't want to say fans, but subscribers, people that are in our chat, maybe even have one or two people join our show live, ask us questions about anything you want, and then we'll give answers. So we want this to be interactive. This show is going to evolve and adapt. As you can see, this is the first live show, so there were a couple technical issues, and we're going to continue to improve as we go. But I just really want to thank everybody for the time. This is really something that we're going to pour our heart and our soul into, and it's really important to us. This, as you could tell, I don't know if you could tell, but this topic, these topics are close to our heart, and we want people to succeed, and we want people to be able to succeed for themselves and not have to follow the crowds. And because you're not going to become financially independent, and you're not going to be able to think for yourself if you do. So that is all that I have for tonight. Jay, as co-host, anything you'd like to end with?
Yeah. So as far as our what I want to say to close out, just keep in mind next week is going to be extremely important, especially on Tuesday when the CPI numbers come out. So keep an eye on exactly how the market reacts when the CPI numbers are released. The market's going to open tomorrow, and let's see how Bitcoin reacts. Because, like I said, right, the price has been pretty much moving sideways over the past few weeks. Those moving averages and those indicators are starting to converge. There's a couple of big events happening next week, including the CPI and then the midpoint of the cycle. And so, if the numbers do come out a little bit harder than usual, and we get a dip in price, do not get footed out. Use that as an opportunity to buy a little bit more in the market, start DCAing a little bit more heavily, because we know exactly where we're going to head. We're going to head into the wave 3 of Bitcoin over the next few months or so. And like I said earlier, it's usually the most impulsive. And so any discount that we get over the next few weeks is going to be an opportunity for you to buy. And so just keep an eye out, guys. If you guys go ahead and join the chat, our Telegram chat, if you have any questions, let us know, and we'll be certainly more than happy to help you guys out. But yeah, that's it for me, brother.
Thank you, Jay. Cassie, I do see your question there. Yes, I think we should be able to add the Telegram link to the description of our channel. That's a great idea. Thank you. I know sometimes on mobile things work a little differently than on the computer, but I think we can add our Telegram chat to our description. So keep an eye out for that. And yeah, thanks, Jay. Again, crypto moves at a very fast pace. You gotta keep on it. And there are some times that are even more important to pay attention. This coming week, it's one of those really important times. With that, thank you, Nate. Thank you, Jay. Thank you, Pickle Yard. Thank you, Jeff. And next week, we'll have a few extra people on the show. You know, we're going to rotate here, rotate hosts, rotate people that are adding content. And so hopefully that'll keep it fresh for you, and you won't have to listen to me talk this much all the time. So from the Degen Roundtable, my name is Brendan. Follow me at anonymous _ bean on Twitter, Anonymous Bean Crypto. And good night, good luck, and stay sharp out there, my Degens.
My name is Jeff.